Thank you for joining the 103 Budgeting for EPR Fees webinar. This recording is from July 11th, 2025, and the information presented reflects the most current details available as of July 2025. Starting off with our legal disclaimer. This is a reminder that Circular Action Alliance is not an attorney nor law firm and does not provide legal advice or recommendations. Please do not take our advice as such. Information in this presentation is not substitute for the advice of an attorney. Please seek the advice of legal counsel as necessary. Okay, our antitrust reminder. As with the nature of EPR, there are many competitors on the call, so please do not discuss any of the topics on the right. CAA will not discuss any of the topics on the right in order to comply with federal, state, and international antitrust or competition laws. Okay, some welcome reminders. As a reminder, this is the 103 Budgeting for EPR Fees session, and this session will focus on providing information on how EPR fees are set and information to support internal budgeting. This webinar is the third session in our three-part onboarding series. We also have our 101 onboarding session that focuses on providing an overview of EPR, CAA, and provides resources to help you determine if you should register with CAA. Additionally, we have our 102 that focuses on registration and agreements and dives deeper into discussing the Participant Producer Agreement, or PPA, the state addenda, and Minnesota registration. As a reminder, if you have any questions related to EPR fees, please email producer.support@circularaction.org. For our agenda today, we will review the producer journey, talk about national fee setting methodology, review fee budgeting for Oregon in 2025, discuss how to do vendor setup for those who reported in Oregon, and talk about fee budgeting in Colorado. Okay, as a reminder, these are the steps in the producer journey. To start, producers begin their journey by registering with CAA. Once you've registered and signed the PPA, you'll receive access to our producer portal. The producer portal is where producers submit supply reports for the state that they are obligated in. As a reminder, producers cannot submit a supply report until the state addenda for the reporting state is signed. After companies submit a supply report, CAA will set a final fee schedule and invoice producers, at which time producers will pay and the program will begin in that state. The first reporting and fee payment deadlines are for the state of Oregon in 2025, with their reporting deadline being back on March 31st, 2025, and the program starting on July 1st, 2025. Once the program begins, we anticipate companies to begin innovating in order to potentially gain bonuses from reduced base fees and/or eco-modulated bonuses that can be received based on actions companies are taking. For today, we are going to focus on budgeting and fees in our discussion today, which is the final arrow in the producer journey. CAA has a set national fee setting methodology that will be the basis for what fees are set in each state. Okay, the components of producer fees. CAA has developed a national harmonized fee setting methodology to guide fee setting across states. Fee schedules for each state will vary due to state-specific requirements, differences in recycling infrastructure, and material supply quantities. CAA determines the total cost of operating a program in a state and allocates the cost of each materials based on the cost to manage each material type, the total amount of material type that is supplied into a state, and the commodity revenue for the recycled material. We will discuss the difference between base fees and eco-modulation fee adjustments. Starting with base fees. Base fee rates are material specific and defined by cents per pound of material. The rates for each material type will be the same for each producer. There are 4 key components for developing the fee schedules. First is the total program cost, which is the cost of operating a program in a state based on each state's specific requirements, which could include the cost of managing all covered material in the system, costs associated with program administration, education and outreach, and market development, and other requirements. The second component is the cost to manage each material category. All materials will have different costs, impacts based on their quantities, material properties, and the ease of collecting and recycling. The third component is commodity revenue for each material category. Materials are created or credited the revenues they earned, which reduces their management costs. And lastly, the fourth component is the total tons of each material category supplied into a state. Now moving on to eco-modulation. Eco-modulation refers to the process where fee adjustments are applied for individual producers based on their actions or inactions to improve environmental performance of their packaging. These monetary adjustments are typically applied in the form of incentives or bonuses or disincentives or malices on top of a producer's base fee for a particular material category. Each state has adopted different approaches to eco-modulation. For example, some states require incentivizing higher uses of post-consumer recycled content or PCR or packaging that is designed for reuse or refill. Other states' approaches focus on reducing material weight or redesigning a package to remove the attributes that can be detrimental to recycling. CEA is working to harmonize eco-modulation factors across states where possible to provide clear signals to producers when they make packaging design decisions. Eco-modulation criteria and implementation details are included in each state's program plan. CAA has some guiding principles which we'll cover in the next slide. CAA invests considerable efforts to allocate only the capital and operating costs associated with the collection, processing, and transportation of each material. This isolates materials that require more equipment and labor to separate into a marketable commodity from those that require less. CAA's goal is to allocate fees fairly across the system. Now let's go ahead and dive into our fee setting methodology and our guiding principles. On the left, you'll see the 7 guiding principles for fee setting. Going down the line, we start with harmonization. In accordance with the mission of CAA, we look to harmonize where possible. Fees is no exception. Next is fairness. Fee rates for each material category are the same for all producers regardless of company size or sector. Fee schedules are informed by producer data, and each material will pay its fair share of system costs. Material-specific costs. This means that fee rates will reflect the burden of a material placed on the system. Commodity revenue. Some materials drive revenue in certain states, and we will account for that in our fee setting methodology. Next is eco-modulation. Eco-modulation refers to the process where fee adjustments are applied for individual producers based on their actions to improve environmental performance of their packaging. Each state has adopted different approaches to eco-modulation, and CAA will incorporate those into a fee setting methodology. Next is responsible end markets. Part of EPR is ensuring responsible end markets are established and/or improved. Fees will account for those costs. And lastly, clarity. CAA looks to provide clear communication to our stakeholder community. Okay, moving on to our national fee setting methodology. Let's go ahead and walk through the variables in fee setting. So starting at the top left, CAA will determine total system costs by conducting a needs assessment or other similar study in a state with an EPR law. Then from there, CAA allocates system cost to each material type based on the burden the material type is placing on the system. From there, CAA will give a credit to those materials that have a commodity value in a particular state to help reduce the cost of that material type. CAA will then also add in additional costs based on management costs such as administrative costs, education costs, regulatory costs, and more. And then, with all of that information, CAA will allocate those costs across the total supply into the system. This is based on the data producers report. After producers report in a specific state where CAA operates as the pro, CAA is able to provide a fee rate back to producers for each covered material type. Once the base fees are set, then CAA will provide bonuses and malices on eco-modulation factors. Currently, LCA Bonus A for Oregon is available for producers to work on, and information about LCA Bonus A can be found on our producer guidance webpage. Okay, moving on to our program budgeting and fee setting process. To start, producers might ask, what makes up the program costs? Program costs include everything that goes into making the program successful in accordance with the expectations of the regulators. This includes aspects of both collection, post-collection, regulatory costs, and administrative fees for the pro. Due to these various factors that make up program costs, fee schedules may not apply in the same way across different states. There are various market and state-specific inputs and differences, including the scope of the program, types of covered material included in the program, state-specific costs to manage each material type and the material revenue, maturity of existing recycling systems in the state, the quantity of each material type supplied into that state, the quantity of each material type supplied to the state by each producer, and the eco-modulation structure and approach by each state. Okay, and with that, we will now look at the state-level eco-modulation comparisons in Oregon, California, and Colorado. Starting with Oregon, the producer fees will cover the cost of capital investments for service expansion and depot setup to service the residential stream, as well as the management of commercially generated or B2B materials that end up being managed under the EPR program. Life cycle assessments, or LCAs, of the impact of packaging material will be included as an eco-modulation factor in Oregon. Bonuses will be granted for conducting LCAs and showing impact reduction. Currently in Oregon, producers can submit an application for LCA Bonus A. The application for LCA Bonus A is due August 15th, 2025, and if approved, the bonus will be included in your 2026 invoice. Moving on to California, the producer fees will cover the net new cost of recycling services to California state residents, including capital investments to infrastructure and technology. Fees will also cover special assessments to support REM development and source reduction initiatives. Eco-modulation is required across 9 factors, including the percentage of post-consumer recycled content, source reduction pathways to achieve source reduction goals, standardization of materials to simplify downstream management, labeling to improve consumer behavior related to sorting and proper disposal, actions taken by the producer to accelerate source reduction and to invest in sustained and robust reuse and refill systems, and plastic covered materials derived from renewable materials. California does not currently have any eco-modulation bonuses producers can apply for, as those are expected to be available in 2027. And lastly, let's look at Colorado. The producer dues will cover the net cost of recycling services to Colorado state residents, including capital investments required for service expansions, material collection, sortation, and processing, and improvements to compost facilities to increase acceptance of compostable packaging. By 2028, the program will also cover recycling services for non-residential entities. Eco-modulation is required across 8 factors and are required to incentivize reductions in packaging, innovations and practices to enhance recyclability, high levels of post-consumer recycled materials, designs for the reuse and refill of covered materials, and high recycled and refill rates of covered materials. Eco-modulation is also required to disincentivize designs and practices that increase the cost of recycling, reusing, or composting covered materials, designs and practices that dispute the recycling of other materials, and the use of covered materials that are not on the minimum recyclable list. Producers can expect to have eco-modulation bonuses available in Colorado starting in 2026. Okay, and with all of that, I will go ahead and pass it over to my colleague Matt to talk about EPR fee budgeting in Oregon for 2025.
Great. Thanks, Savannah. To start, we'll discuss Oregon's fee budgeting for 2025. So in the Oregon program plan, starting on page 198, you can find the proposed fee schedule and other financing information, including estimated flat fee rates for low volume producers. In the Oregon program plan, each material type lists a draft fee base estimate on its own line. You can review these and more detailed fee information in the Oregon program plan that has a preliminary schedule across 60 material types. For each material type, there is a low fee scenario and a high fee scenario. Now, importantly, this does not mean that fee rates for every material will fall in this range. The key here is it does depend on the amount of reported weight for each material. So that is what determines actually the final fee rates. And at least for the estimated fee rates, we have used estimated values to determine these. But for those that have access to CAA's producer portal and have reported, the final fee rates have been announced. As I just mentioned, the Oregon 2025 final fee rates have been announced. So while the Oregon program plan was published with estimated base fee rates, the final fee rates in all 60 material categories and the flat fee tiers for the 2025 program year that runs from July 1st to December 31st of 2025 is currently available. Now, as Savannah discussed earlier, the fee rates were calculated using submitted producer supply reports for Oregon based on producer supply tons by material type. To view the 2025 Oregon producer fee schedule, log into the producer portal, navigate to the useful links section on the homepage, and select the article titled 2025 Oregon Producer Fee Schedule. The final fee schedule is not available on CAA's general website, so please log into the portal to view the fee schedule. Right, so as mentioned, producer supply data plays a critical role in setting state-specific fees. The Oregon fees take into account three key factors similar to the national fee setting methodology discussed earlier. So the first factor is the system cost. Now, we have a good idea on this piece at this stage as outlined in the Oregon program plan. CAA has conducted an evaluation of the Oregon recycling system detailed in a project titled the Oregon Recycling System Optimization Project. So the second factor is the number of producers. So producers continue to register with CAA even after the reporting deadline, and of course, even after the program start date of July 1st. Late reports were included in fee setting through the end of April to include more producer report data in fee setting in an effort to minimize fee rates. So the third factor is the supply data. Reports in Oregon were due March 31st, but as I just mentioned, CAA included reports submitted through April 30th to include in fee setting. The supply data is used to both set the fees and calculate your company's fees. All producers will pay the same fee rates, regardless if you reported in March on time or if you submitted a late report. Now, for those that submitted late or reported late, they may be subject to late fees and interest on top of paying their respective individual material fees. Great. So for producers who have submitted an Oregon report, invoicing was completed in June. If you're watching this and submitted a late report for Oregon, invoicing is generally conducted weekly. So after your report is validated by CAA, you should expect to receive your Oregon invoice within a week or two. And just to highlight on the slide under definitions, I'd like to discuss at least correction and adjustment. So a correction is a change to a producer report required by CAA because of its ongoing report validation or because of an independent audit. Producers will receive a correction letter and have 60 days to respond to that. Now, an adjustment, on the other hand, is a change to an already submitted report initiated by a participant. So for adjustment requests, to speak a little bit more on that, CAA has formalized Oregon adjustment requests for submitted reports where a producer finds a mistake or maybe a data entry error. The adjustment request Excel spreadsheet will detail everything that is needed to submit your request into the producer portal under the Help and Support tab. You can find the adjustment form in the producer portal in the adjustment request article, viewable in the useful links section on the homepage. The adjustment submission instructions are outlined in the middle of this slide and also outlined on the Excel spreadsheet. If the adjustment is validated, it will impact any previously approved eco-modulation reports. Any validated adjustments will result in either an additional invoice or a future credit. Importantly, producers should plan to pay their original invoice for Oregon 2025 as is by the due date included on that invoice. All right, our last slide on Oregon here as we look ahead to budgeting for Oregon in 2026. Producers will not submit a new supply report for Oregon's 2026 program year. The next reporting deadline for Oregon will be May 31st, 2026, but that data will be used to set fees for the 2027 program year. So again, producers will not need to submit a new supply report for Oregon's 2026 program year. Billing for the 2026 program year will be based on the 2024 supply data producers submitted during the Oregon reporting deadline earlier this year. The 2026 fees will be calculated in accordance with the 2026 Oregon budget and will incorporate adjustments and corrections. It is important to emphasize for budgeting purposes that the fee rates in 2026 will be different than the fee rates for the 2025 program year that ran or runs from July 1st through December 31st of 2025. The 2026 Oregon producer fee rate schedule will be published this October. The 2026 program fees will be split into two invoices, one billed in December of 2025 and the second in June of 2026. Great, we have just a couple of slides on setting up CAA as a vendor. So CAA's vendor information is now available for billing setup. So all producers should start to configure CAA as a vendor in your system and prepare to receive invoices from CAA. So each Oregon report and Colorado report for that matter will generate a separate invoice. CAA's vendor information is now available in the producer portal in the CAA vendor information article. If your company requires a W-9 to be on file for your vendor setup process, we've already linked that in that article. And once you've set CAA up as a vendor, you should please complete the vendor setup confirmation form. There's a link to that in the producer portal article. On this form, you will also be able to add a PO number if it is required on CAA's invoice for processing. Only PO numbers submitted in the confirmation survey will be added to CAA invoices. If you have any questions about making payments to CAA, or if you need CAA's action on anything related to your vendor setup, please email us at ar@circularaction.org. Preparing to process your invoice, Oregon 2025 EPR fee invoices will be sent to producers who submitted a 2025 Oregon Producer Supply Report if you haven't received one already. If you're watching this video and you have already submitted your 2025 Oregon report, it's very likely that you've already received your invoice. Invoices will be sent from Circular Action Alliance at myworkday.com. And to avoid any delays in receiving invoices, producers should contact their IT security team and request that inbound traffic from this email address is whitelisted. By default, invoices will be sent to the primary contact listed on your account. If you previously completed the vendor setup confirmation survey or provided a unique billing contact to CAA, they will also receive the invoice via email. Great, we have 2 slides on Colorado fee budgeting for 2025 before we wrap up. A detailed fee schedule, which are called dues in Colorado, was published in February of 2025 in the first draft of the Colorado Program Plan. In the updated version of the draft Colorado Program Plan published by CAA in June of 2025, the estimated dues did not change. So regardless if you're looking at the first draft or the updated draft from June, this slide is going to look the same. These estimates can be found on the June version of the Colorado Program Plan on page 190. And you can also find the Colorado Program Plan on the Colorado page of our website or on CDPHE's website. The estimated dues in the Colorado program look very similar to Oregon that we just saw a few slides ago. However, they are listed by the aggregated material category as opposed to the specific material category for those 60 material categories for Oregon. Similar to Oregon, that gives a fee range. In Colorado's program plan, there is an addition of a third fee range for material categories. So there's a low, a medium, and a high scenario. But on the far right of this slide, you can see that there is also a minimum and a maximum range of the individual of the material category dues, which Oregon did not include. And this is a slide that overviews the Colorado Program Plan timeline. So again, this video was recorded July 11th, 2025. So right now, Colorado has submitted its second draft, its revised Colorado Program Plan. So the advisory board is now going through their second review. There will be a CDPHE review and a public comment period prior to the potential plan approval mid-December. Hopefully that will be approved before it's expected to be approved before the program start date of January 1st. But as a producer, the main 2 deadlines or the main 2 dotted lines here that you can review here is the reporting deadline of July 31st, and then that will come before the actual final 2025 or 2026 program year Colorado dues are announced. That will be by October 31st of 2025. Great. Well, thank you very much for following along with this video. This is the third and last of our 100 series. If you are watching this video and you believe you are an obligated producer and you have not registered with CAA yet, please go ahead and fill out the registration form on CAA's website. You are also more than welcome to view our Producer Resource Center, which is also linked on our website. That includes different frequently asked questions. There's some upcoming dates on there as well. It's a lot of great information. We'd also encourage you to sign up for our monthly newsletter that gives the latest updates for each state and new resources as they are made available. If you have any registration or reporting questions, you are more than welcome to email us at producer.support@circularaction.org. If you have any vendor setup or invoicing questions, I recommend emailing ar@circularaction.org. And you are more than welcome to attend an upcoming event hosted by CAA. You can use that QR code in the bottom right-hand corner to link you to the registration page. You're also more than welcome to, of course, view any other of our recorded sessions that we have available on our YouTube channel. Thank you very much for attending. We look forward to seeing you in an upcoming webinar.